Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. Today, I'm going to talk about two asset classes. First, stocks, the S&P and the Nasdaq. Second, precious metals, gold and silver. So last night, the S&P sold off sharply. Stocks sold off pretty sharply, but recovered just as quick. The White House trade advisor said the trade deal is over. Navarro, those were his comments. President Trump and his other advisor, Kudlow, walked him back quickly. We saw the S&P hold major three-star support at 3060, 3070. This was another technical rejection of lower prices. We saw it Sunday night, coming from Friday's weakness. We saw it the previous week, coming from weakness late that week, and the Sunday night low again. Overall, the stock market does not seem to want to go lower. Central bank liquidity is continuing to lift stocks as well as the precious metals. So overall, we're seeing some very constructive technical patterns. I'm going to show you here in a second. But the way we like playing it, I mean, there's micro S&Ps, there's regular size S&Ps, but you can manage your risk very well. Look for a stop below 3020, and we're targeting 3525 in the S&P, and I'm going to show you why. So you do have the 50-day moving average creeping up here on the 200-day moving average to provide a technical tailwind. You have this bull flag pattern here, but another trend line here that we actually closed out above barely today. So what we're seeing as well is a rejection against the 200-day moving average, whether it just kind of bled below it, here, not intraday though, or tested it, not intraday again, but tested and held it. So overall, we're seeing a very constructive landscape. We want to see a close out above 3175 is going to be pretty key. That is the gap from June 10th. Well, once it does, we think the path least resistance is going to be even clearer, higher, and the range reversal from this sell-off, from this range here to complete that range, gives us our target to the upside of 3525. Now, the Nasdaq is a great has laid great groundwork to believe stocks are going higher. This is the record high previously set in the Nasdaq, and this is it holding out above it. Set a new record high today, a new closing record high today, but ever since it took it out for the first time back on June 5th and closed above it, we've seen the Nasdaq close out above its previous record high 11 out of the last 13 sessions. Closing consistently out above its previous record high is a sign that it wants to go higher, and we're not going to fight it, and we think that the S&P has catch up to do. Now, this leads us into precious metals because gold, similar to the Nasdaq, has done the heavy lifting for the metals complex. It's had this inverse head and shoulders, broke out above it. It's held every battle test to the downside, and now it's breaking out above. This is a continuous gold contract, breaking out above its continuous trendline highs. And today, it held out above there very well. It looks like it's setting up to take this out and trade at least 1800. I was on CNBC yesterday and said buy 1770 with the stop 1770 or better with the stop at 1750, targeting 1820. I think we're going to get that move in the next 24 hours. But what's important here is similar to the S&P, the silver contract has the 50-day moving average creeping above the 200. It's closing out above a trend line, and that's going to help bring a technical tailwind. So I look for silver to play catch up with gold, but both overall to go higher. That's how I'm viewing things here today. We may talk about managing some of that risk tomorrow, but right now we look at the path to least resistance higher in both contracts, and that's what we're expecting as of right here, right now. Give us a call for any questions. Our phone number 312-278-0500. Remember though, futures trading involves substantial risk of loss and is not suitable for all investors.